Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. We're going to look at the S&P after the close on April 12, 2012, but before we do so, we got to do the drill. And the drill goes like this. The website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions. I can't even talk. And make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. The gist of this is simple. Don't take my word for anything. The goal of my website, the goal of my videos is to turn you on to a way of looking at stock charts. It is not to tell you what to do. You'll notice that I almost never say this is what you should do here or there. I just say this is where you can expect resistance, this is where you can expect support. And you have to make up your own minds about the validity of these methods, and you also have to make up your own minds about the suitability for your purposes. So let's take a look with that out of the way. Okay, the first thing I'll do, and I'm going to speak a little bit out of turn here. Here we are, it's Thursday the 12th, and we've got one more day in the week, but this has been one of those weeks where I just feel like, I don't know, I feel almost like some kind of savant or something, because the market has it's just made everything so clear. At least, from the last part of last week, back when we were up here around the 1390s, all of this just makes perfect sense. And I think we were able to pretty much expect each of these moves based upon these little areas of congestion, based upon hanging around over this line right here for 2 days, kind of like the market saying, "Hey, I'm just hanging here because I'm thinking about jumping off." It's not like, "Ooh, that's tall, let's go back up." It's like, you know what I'm saying. So today, as we talked about yesterday, this looked like a little bull flag forming here. And lo and behold, it played out just like a bull flag. So this is almost a textbook case in what these little patterns do. Here was a bear flag. It comes down and makes kind of what you might call an inverted... I don't want to get into long, drawn explanations, but you could maybe call this kind of an inverted typhoon flag. It's like a swift down move, but then it starts to firm up, but it still slides down. And since it was underneath this lower trend line in this channel, we made the call that looked like that may be an area of at least short-term capitulation. And remember, we've been talking for a long time about how a downside break of a descending support line cannot be counted on to hold levels below it. As a matter of fact, the very next day, we jump right back over the top of this line as we discussed on the 10th, and then we formed this little bull flag, which we discussed as a possibility yesterday, and the market promptly and thankfully it gave us a chance to even get in on this rather than gapping up. Actually, there was an opportunity to take a look at this and say, yeah, this is breaking out. How nice. We don't always get those opportunities the way the markets have been trading over the past weeks and months. There's been this real propensity for moves to be made at the open. So there you go. Nice day. Now what do we have? Well, we have clearly broken this little descending channel. However, we have not gotten any kind of back test on this line, on the broken resistance line. And if you'll notice, you'll see that the trading throughout much of the day today has taken on a a fairly well-known shape. And that is what? That is a little ascending wedge here. And I'm not saying, I'm not going to tell you what to do, but I'm saying the tendency is for an ascending wedge to produce a downward move. And that wouldn't surprise me one bit. But I still think we may very likely get a back test eventually up to this 1400 level. Okay, because you remember we had our triple top right here. We're not seeing the touch over here to the left of the screen, but there's our three tops, and here's our neckline for that. And I think it would not be out of the ordinary or out of the question to see a return to test this line in the 1400s. I think that will create some resistance. If the S&P is able to overcome that resistance, then we also might be expecting even a back test of this green line, which is the line drawn. Let's just go to a daily chart. That green line is the line which is drawn from the October low across a succession of 1, 2, 3, 4 bottoms. So that line clearly has been broken. Now I have admitted to not being totally satisfied as to the validity of this starting point right here on that panic bottom back in, I believe that was October 3rd. But there is no place you can draw this line over any of these 4 bottoms right here that saves this as being a breakdown of that pattern. You just can't do it. So this line is broken, and it may get a back test at some point. And guys, in the long run, if the market can consolidate here, maybe go sideways for a bit, I think we may be setting up for an even higher high than what we saw up here in the 1420s. That's just my gut level. Now, I want to add to that. I've got no pattern. I've got no real strong charting reason to believe that. There's no pattern that says we should do that. If anything, one of the reasons why I feel that way is because when you take a look at the long-term chart here, going all the way back to the highs of 2000, you can see that on this occasion, back in 2000, we got up into the mid-1500s. In 2007, we got back up into the 1500s. And, it just sort of makes sense, maybe wrongly, but it just sort of makes sense to me that with the market having come so far, it just seems like it should come up and give that a go. And if that fails, then it's going to be bad news. But if this line were to break, and on conviction, and we're a long way from that, we're 220 points from that, from where that would be a breakout. But if it were to break out, then you've got to look at the market, and you have to look at this pattern over the past, 12 years, and you would have to say to yourself, okay, what does this mean? And so, that's looking well ahead. Right now, all that I want to say is the possibility of a retesting of these highs, I don't think is out of the question. Not when I look at this chart. Now, albeit this all looks real choppy in here, like it may be looking for a downturn. We're not having the same kind of controlled and fairly unvolatile path that the S&P took back from 03 to 07. We're getting a lot more chop in here. But still, having come this way from the mid-600s all the way up to 1387, actually into the 1420s, it's kind of like saying, well, what's another 150 points on top of 1420 at this point? it's what, 10%, 10 or 11%. So look, all I'm saying this primarily is try to keep an open mind. Just look at the chart and try to go ahead and read it and try to gather what information you can from it. But I think it's dangerous to draw a conclusion and then look for the chart pattern to support the conclusion. As much as you can, be objective in your reading of the charts. I think if you do that, you'll fare much better than the average person. So right now, in an objective manner, these little flags have been working. There's the bear flag, sort of I don't know what to call this down here. That's why I struggle every time I talk about it. It's a descending little flag pattern, but it's at the bottom of the flagpole, kind of the opposite of what we now have, which is a little ascending flag at the top of a pole. So I would expect probably some weakness tomorrow, or if not tomorrow, we could head on up a little higher and maybe even redefine a little bit in this pattern. But this does not give me a lot of encouragement for the kind of strength that we had today to be evident tomorrow as well. So just be prepared. If this little pattern breaks down, then we would likely come down to the 1370s again and maybe wiggle around there a bit. And it's even possible to come back down to retest this broken resistance line. And folks, that's what double bottoms are made out of. In many occasions, what a double bottom is you have a bottom that comes in either at a channel line or, in this case, a little below it, and then you break out, and then you come back down and you tag this line at some point in the future, and it's amazing how often that creates a double bottom, which then leads to, and in this case, if that were to happen, it would lead probably, if it were to break out of that double bottom status, then that would probably be setting us up for a retest of this 1420 line. But look, that's the video for today, Thursday, April 12th. There will be a weekly recap tomorrow, and I've also got some news I want to share with my subscribers and with those of you who just follow me on YouTube and are not subscribers. It's not a huge thing. I'm gonna be making I'm going to start doing a blog. It's not going to be on my website. It's going to be on another website, but I think it's going to be a really neat opportunity. This is an upstart thing, and I just spoke with the developers of this, and I want to reassure you that this changes nothing that I do here one bit. But it is, I think, an interesting venue that is just getting launched. So I will be making that announcement early next week. And it will be involving the finances, the finance community, and some folks who have been conversing for a number of years via the internet on stocks. We've gotten to know each other over the years, and anyway, I'll tell you about it next week. For right now, thanks for watching the video, and be sure to look for the weekly recap that will come out after the close tomorrow or probably early on Saturday. Thanks again. Take care.